as it was running up so fast, investors started to get FOMO, and then we started to see the fundamentals started to conform to the price action, and it pulled the fundamentals up. And so, I mean, if you can create enough fear in the market, the fundamentals can change, and then I would go, oh shit, yeah. But luckily we're in the zone where as the price is going down, everyone's going, oh shit, and buying.
Like 2% penetration of the world population. And so when you see an asset break an all-time high, you've got the choice to sell it because this asset is really made you a profit, or you can say that asset is just had another validation that it is coming in to dominate the world.
Well, there's definitely a oh shit price if I'm in a leverage trade.
Always.
Like usually the oh shit happens if the fundamentals start to swing, right? Sometimes these market events that happen where price action actually changes the fundamental, you know, like we saw that in the short squeeze in, was it 2019, when price broke out of the $4,000 range and it just went all the way to 14. And you know, it squeezed investors, and effectively it was well overvalued. But as it was running up so fast, investors started to get FOMO, and then we started to see the fundamentals started to conform to the price action, and it pulled the fundamentals up. And so, I mean, if you can create enough fear in the market, the fundamentals can change, and then I would go, oh shit, yeah. But luckily we're in the zone where as the price is going down, everyone's going, oh shit, and buying. It's like, because, you know, I was tweeting bearish tweets after bearish tweets based on on-chain analysis in 2018, the bear market of that, and they hated me, absolutely hated me. And now I'm doing bullish tweets and they're hating it, saying it's going to 20, but it just says to me, like, actually the whole thing's flipped. Everyone wants to buy Bitcoin, but they want to buy it cheap. And they want the $20,000 Bitcoin price so they can buy it. And it's interesting now because on-chain analysis is very widespread, and everyone's got access to the charts. And so people are posting very bearish on-chain analysis too. But I'd have you know that the on-chain analysis for the bearish stuff is fundamentally very bad analysis, and it's flawed analysis with major gaps and misunderstanding of what the data they're looking at is actually saying. The rate of Bitcoin's growth, you know, 1 in 8 people will have exposure to it in 4 years. It'll double in the next 4 years. No, double every year after it. So we're looking into the decade, majority of the world on this network. It's faster than any other network in history. So we're looking at a major power shift in the next 10 years. I think that we'll start to transition from very powerful nation states to like smaller nations, city-states. And I think that'll be profound. I think those would be the areas that are prosperous. So yeah, I feel like this is like the last ditch effort from a dying power structure. And so to answer the question, yeah, I don't think that is the risk. I think the risk is if Bitcoin fails internally from centralization. If it becomes too centralized, then, you know, it fails on its original objective, which is really a kind of democratic, monetary democracy, essentially. If you centralize the control of the money, then we're back to where we started, very centralized control. And if that was centralized and controlled by a nation state, then this whole future that we think about, where we have like a fair monetary system ceases to be fair anymore. So yeah, I think that's the biggest risk. And I think also the people don't really understand that as as the most important thing in Bitcoin is its decentralization. So a lot of people talk about, oh, XYZ coin is more scalable, it has this or that, faster block times or whatever, but that's not really important when you're talking about winning the game of being the monetary base, which is like $100 trillion. You need that to be decentralized. So I would rather have a 10-minute block time than a nanosecond block time with something that's highly centralized, because that's a failure.
And then you have this other type of asset, which is what Bitcoin, Ethereum, and these digital networks represent. And they are these assets that they're new to the world, and these are new technologies that are gaining adoption. And new technology always goes through this adoption curve we call it the adoption S curve, where it goes and it creates this kind of S as it sort of goes exponentially upwards, and as you get closer to the 50%, it slows down until you eventually get to saturation at near 100% usage. And so we'll see that in the tech world, where with the internet, you'll see it with mobile phones, you'll see it with any new technology. And so the realm of investment for people who invest in new technology, and these are our venture capitalists, they know how to invest in new tech, and they never sell the tops. They buy the tops. And this is the view that one should have with Bitcoin. It's a newer technology, and currently there's only somewhere around the 1.9% of the world population that has exposure to this asset. And if you believe that the internet is going to go to 100%, which it's pretty close to now, and you believe that we're going to have internet native commerce, and there'll be an internet native currency that is borderless and an internet native store of value, 2% penetration of the world population. And so when you see an asset break an all-time high, you've got the choice to sell it because this asset is really made you a profit, or you can say that asset is just had another validation that it is coming in to dominate the world. You know, if you were given a choice, would you buy the asset that is broken an all-time low, and it's a new technology and it's continually making new lows and it's meant to dominate the world? It's obviously gone off the adoption S curve. So whenever you see this thing break a new high, it is gaining more traction and it's being validated, and you should buy it and you should sell it when it reaches saturation. When Bitcoin is used by the majority of the world, then that's probably a good time to sell it. But just keep buying those tops. And this strategy actually works in a backtrace. If you measure that and run that strategy for Bitcoin, it is way more profitable than trying to get these oscillations.